All right, let's dive right into this explainer and decode the three massive financial changes happening to senior money this September. We're going to cut through all that bureaucratic jargon with some plain, neighborly talk, take those overly complex rules sitting on government websites, and turn them into something you can actually use. Three major things are happening to senior money right now, this month, and the biggest one is already two-thirds of the way finished. We're going to bypass the usual confusion today and look directly at the actual government rules for your Social Security math, unlocking your Medicare extra help, a brand new IRS senior tax deduction, and finally, how to actually claim what is yours. First up, the Social Security math and how your January raise is actually calculated. You know, there's this really common myth floating around that the government just decides your Social Security raise behind closed doors in December. But the reality, it's based strictly on hard arithmetic happening right now. As stated on the Social Security Administration's own page, your raise is based on the increase in the Consumer Price Index for urban wage earners and clerical workers, and they measure this strictly across the third quarter. That's July, August, and September. That's literally it. By the time October rolls around, the math is completely finished. So when you get that official notice in December, it's definitely not a new decision. They're just reporting the results of the measuring they're doing during these 3 months. Now, here is the absolutely crucial point. You have to understand the difference between your gross raise and your actual net check. It's kind of like pouring water into a leaky bucket. Take last year, for instance. The raise came in at 2.8%, which averaged out to roughly $56 a month. But listen, a raise and a check are two totally separate things. Your raise gets calculated and applied first, but then comes the Medicare Part B premium, and that premium is set completely separately later in the year by an entirely different agency. If that premium climbs faster than your raise does, well, the net deposit actually landing in your bank account barely moves. Some folks see almost nothing at all. And it's not a mistake. It's just two separate calculations colliding inside one single deposit. Moving on to number 2, unlocking Medicare extra help and why you might be leaving unclaimed money on the table. So do you earn too much to qualify? You know, this program has been around for years, paying for premiums, your deductibles, and those out-of-pocket costs at the pharmacy till, yet it constantly sits there unclaimed. Why? Mostly because people completely misunderstand the phrase limited income. So many households just automatically assume they don't qualify because, well, they aren't destitute. They hear limited income, assume it describes someone way worse off than they are, and they literally just stop reading. But let's actually look at the hard numbers printed directly on Medicare's own site. Look really closely at these cutoffs. An individual can actually have an annual income up to $23,940. A married couple, up to $32,460. And on top of that, there's a resource limit for things like bank accounts and investments, sitting at over $18,000 for an individual and over $36,000 for a couple. And here is the absolute kicker. That resource limit completely excludes the value of your house and your car. Compare these limits to what's actually arriving in your bank account every month. You might suddenly realize you've been unnecessarily ruling yourself out of money that is already available to you right now. And here's some crucial details about extra help that people usually find out way too late. First off, the timing. You can apply for this at literally any point in the year. It's not tied to that super stressful fall enrollment window everyone always talks about. Waiting gets you absolutely nowhere here. Second, if you ever went without drug coverage and got hit with a late enrollment penalty, extra help wipes that penalty out for good. It's gone. And finally, it actually shields you from upcoming premium hikes. See, a temporary program that was holding down premiums on standalone drug plans is ending at the close of this year. That means many monthly premiums quoted for next year are likely going up, but anyone already on extra help is shielded from most of that hit. Furthermore, a brand new rule is completely changing the arithmetic for anyone with expensive prescriptions. It caps your total out-of-pocket drug costs at exactly $2,100 for the year. Once you hit that ceiling, boom, every covered drug after that point costs you absolutely nothing until January. This completely eliminates that infamous coverage gap, you know, the one often called the donut hole that people used to fall into every single autumn. It's a real game changer. Okay. Let's jump to our third topic, the new senior deduction. This is a very quiet change in the tax code. So this sits squarely in the IRS tax code, and it's the newest arrival of our 3 items today, effective for tax years 2025 through 2028. According to the IRS newsroom, there is a brand new additional $6,000 standard deduction purely for being 65 or older. There's no paperwork to chase, nowhere to enroll. It just comes right off your taxable income simply because of your age. And if you're a married couple where both spouses have hit 65, that deduction actually doubles to $12,000. Now, let's break down exactly how this works because the details really matter here. This $6,000 amount stacks directly on top of the existing standard deductions seniors already get on Form 1040. And what's brilliant about this is that absolutely no itemizing is required to take it. Since the vast majority of retired households just take the standard deduction anyway, this is huge. But, it's the IRS, so limits do apply. The deduction shrinks and phases out once your modified adjusted gross income, which is basically just your total income minus a few specific deductions, passes $75,000 for a single filer or $150,000 for a couple filing jointly. Also, a quick heads up, if you are married but filing separately, you can't claim it at all. Oh, and here's a really fascinating quirk about how the IRS counts your age. They look at your age on the very last day of the tax year, meaning someone who turned 65 in late November is treated exactly the same as someone who has been 65 for a whole decade. So you might be wondering, why on earth are we talking about a tax rule in September? Well, it's because there are only 3 months left in the tax year. Inside this narrow window, widows, widowers, and seniors on modest incomes really need to take action. If you fit this description, you can still call your pension provider or the Social Security Administration right now to adjust your withholdings before the year closes. Because once December 31st passes, the year is totally over. Your tax return itself becomes your only move. And you might have spent the entire year paying tax withheld at a rate that was set before this new deduction even existed. Which brings us to our final section, claiming what is yours. Let's move from just looking at paperwork to actually taking action. Because, let's be honest, having all this information is great, but none of these rules or deductions mean a thing unless you physically check them against your own paperwork and actually do something about it. So, here's your action plan. First, when September ends, the count on your raise closes, so check the math when those numbers lock in. Second, compare your income against those Medicare extra help limits we just talked about. If you think there's even a chance you qualify, call 1-800-MEDICARE. That's 1-800-633-4227 to apply. Third, if you need help with your returns, please don't feel like you have to pay someone. Use the free services staffed exactly for this, like tax counseling for the elderly, AARP tax aid, or your state health insurance assistance program. And a vital warning straight from our source material: please be safe. Double-check anything that touches your money with the agency itself before you act. Real government agencies are absolutely not going to call you out of the blue asking for your passwords, account numbers, or card details. Protect your data. I want to leave you with a really profound thought from our source material today. People constantly attach the word handout to these programs, but charity has absolutely no place here. You paid into this system across a working lifetime, 40 years for a lot of you. The rules for getting your money back out sit right there in public, on government websites, written in language that, frankly, nobody enjoys reading. But the hard truth is, the system simply keeps whatever you never ask for. So the choice is entirely yours. Pick whichever of these 3 changes applies to you and check your own paperwork against it this week, rather than waiting for January to roll around. Take this information, pass it along to that one stubborn friend who insists they earn way too much to qualify, and ask yourself, will you make the call this week to claim exactly what is yours? Thank you so much for joining me for this explainer, and I will see you next time.